You are not earning money. You are just trading your finite life force for a vanishing illusion. The system doesn't want your cash. It wants the time you spent to get it. There is a silent thief in the room. He breaks into your future. The dollar in your pocket isn't a store of value. It's a melting ice cube. Every single second, your power is being liquidized in silence. Inflation is not a natural disaster. It is a feature of the design. Welcome to the real world, where saving is the most dangerous financial move. When they print, they steal, but they don't use a gun. They use a computer. The great decoupling has begun. Your numbers go up, your power goes down. This is taxation without representation. And the worst part? You are paying the bill for a party you weren't invited to. Look closer. What do you see? Wealth or noise? A savings account isn't a vault. It's a leaky bucket. Wages crawl, assets fly. The gap is where your freedom is buried. This is the money signal. Wake up. To understand how the trap works, you must look at the year everything changed. The year 1971. That was the year money stopped being a receipt for physical gold and became a receipt for debt. Governments discovered a magic trick, the ability to print wealth out of thin air. But there's a catch. Here is the truth of physics and economics. Nothing can be created from nothing. When they print trillions of new dollars, they aren't creating new value. They are siphoning the value out of the dollars you already hold. It's a hidden tax. You feel it every time you go to the store. The cart gets lighter, but the bill gets heavier. They tell you it's broken supply chains. They tell you it's corporate greed. They are lying. It is simply the math of currency debasement. More paper chasing the same amount of goods. Think about it. Your grandfather bought a house for $20,000. Today, that same house is $500,000. Did the house get 25 times better? No. The house aged. The money died. To survive this game, you must stop thinking in dollars. You must start thinking in purchasing power. Why do the rich love inflation while the middle class is crushed by it? Welcome to the Cantillon effect. Imagine a giant fountain of newly printed money. Who gets to drink from it first? The banks, the government, the mega corporations. They get the new money when prices are still low. They use this free capital to buy up hard assets, real estate, land, stocks. They buy the world. By the time that newly printed money finally trickles down to you, to your paycheck, the damage is already done. The prices of everything have already adjusted upwards. You didn't get a raise. You got a pay cut hidden inside a bigger number. The Cantillon effect is a silent transfer of wealth from the working class to the elite. Every time the printer goes brrr, the gap between the owners and the renters becomes a canyon. You are running on a treadmill that is constantly speeding up, and they control the dial. So what is the antidote? How do you step off the treadmill? The system is a trap, yes, but the door is unlocked. You just have to stop looking at the paper. Rule number 1 of the new economy: stop saving currency. Start owning scarcity. Governments can print $1 trillion in an afternoon, but they cannot print an acre of land. They cannot print a barrel of oil, and they cannot print physical gold. Wealth is not about how many dollars you have. Wealth is about owning the things that the dollars are trying to buy. And in the 21st century, the definition of hard assets has evolved. Welcome to the digital rebellion. For the first time in human history, we have an asset that cannot be diluted, confiscated, or inflated by any politician. Bitcoin is not a stock. It is a cryptographic wall built between your labor and the government's printing press. He rich know this. While the media distracts the masses, the elite are quietly converting their melting fiat into indestructible ledgers. You are standing on a burning bridge. The only rational move is to cross it. Let's start with the classic, real estate. Everyone tells you to buy a house to beat inflation, but there's a secret tax they don't mention. Maintenance, property taxes, insurance. While your house's price goes up, its cost is eating your purchasing power from the inside. Real estate is a shield, but it's a heavy one. You are anchored to a location, and in a global crisis, mobility is your greatest asset. Now look at gold. For 5,000 years, it has been the ultimate no to government overreach. Gold doesn't pay dividends. It doesn't grow. It just sits there. Being honest, being finite. In 1920, an ounce of gold bought you a fine suit. Today, it still buys you a fine suit. It hasn't gained value. It has simply survived the dollar's death. But gold has a problem for the modern age. You can't send it across the ocean in a second. You can't verify its purity with a click. This is where the signal changes. This is where the digital gold enters the chat. Why isn't everyone running for the exits? Because the trap is invisible. It feels like stability. Normalization. We are like the frog in the pot. The heat goes up slowly, and we call it inflation control. But in 2026, the temperature is at a breaking point. The pond is drying up, and the exits are closing. They lure you with yield. 5% in a savings account sounds safe, but it's a mathematical illusion. Math is cold. 5 minus 9 is -4. You aren't earning wealth, you are losing blood. This is the yield trap, designed to keep you stationary while the value is sucked out through the back door. But then, the signal changed. A code that cannot be printed, an asset that cannot be corrupted. The math of 21 million. No more. No matter how much money they print, they can't print more of this. This is the final decoupling. Your labor finally separated from their printing press. Knowing the problem is only half the battle. Now, let's talk about the solution. How do you actually position yourself? Step 1. Redefine your cash. In an inflationary world, cash is a melting ice cube. Use it as a tool, not a store of value. You need to move your energy into things that have physical or mathematical limits. Let's start with hard assets. Farmland, real estate, and precious metals. These are the classic anchors that have survived every empire's collapse. But in 2026, you also need speed. You need assets that can move across borders at the speed of light. This is why your portfolio must be a mix of the old world and the new world. Stability meets digital freedom. Don't try to time the market. Time is the one thing you can't get back. Start building your arc today, because when the signal turns red, it will be too late to start listening. This is your wake-up call. The money signal is loud and clear. Are you paying attention? Now, let's build your arc. This is not financial advice, but a blueprint for survival in the age of debasement. A balanced portfolio in 2026 isn't about picking gems. It's about asset allocation. 40% should be in foundational assets, physical gold, silver, and real estate. This is your floor. 20% in digital scarcity. Bitcoin is your insurance policy against the banking system. 30% in productive equities, companies that can raise prices with inflation. And 10% in hyper-liquidity, cash for when the crash happens. This isn't a static plan. It's a machine. When one grows too large, you rebalance. Step 1. Get out of debt. High-interest debt is a hole in your arc that will sink you before you even start. Step 2. Automate. Set a system where part of your income goes straight into these assets every month. The goal isn't to be rich tomorrow. It's to be free forever. In 2026, freedom has a price, and it's called preparation. Step 3. Secure the perimeter. If your wealth is digital, your walls must be unbreakable. A hardware wallet is your private vault. Not all gold is equal. You need physical investment-grade bars, no certificates, only 999.9 purity. For your equities, look for pricing power, companies that can survive the inflation wave, the 30% that produces. Rebalance, it's the machine of wealth. Buy low, sell high. Simple math, but few have the discipline. Gold versus Bitcoin. One is 5,000 years of history. The other is 17 years of digital revolution. You need both. Gold is your hedge against the crash. Bitcoin is your hedge against the system itself. 40% versus 20%. What about taxes? What about bans? In a digital world, the only thing they can't take is what you truly own in self-custody. Is it too late? No. The transfer of wealth from paper to hard assets has just begun. 2026 is the starting line. The middle class is being erased by design. The new elite are those who understand the signal. Audit, automate, achieve. Volatility is the price you pay for performance. Most people want the gain without the pain. They fail because they can't look at a minus 30% red number without panicking. In 2026, the noise will be deafening. To survive, you must replace emotion with math. Numbers don't have feelings. Systems don't get scared. Your biggest enemy is your own reflection. When the market crashes, the news will call it the end. The signal calls it a discount. Let's talk about the 3 layers. Layer 1, physical cold storage. Layer 2, self-custody wallets. Layer 3, strategic liquidity. Layer 1 is your never sell pile. 40% of your net worth and assets that exist outside the digital grid. This is your ultimate insurance. Layer 2 is your growth engine. 20% in assets that can move across borders in seconds. This is your bridge to the new world. The clock is ticking. 2024 was the warning. 2025 is the preparation. 2026 is the event. Where will you be standing when the music stops? This is not about being a millionaire. This is about being a sovereign individual. Someone who can't be canceled, inflated, or controlled. Your arc is ready. The blueprint is in your hands. Now there is only one thing left to do. Build it. 1455. The normalcy bias is a deadly trap. Your brain wants to believe that because tomorrow looks like yesterday, the system is safe. It's not. When you start building your arc, the crowd will laugh. They will call you paranoid. But in 2026, paranoid will be another word for prepared. Don't seek validation from people who are drowning. The signal is for those who can swim against the current of debt and inflation. Privacy is not a crime. It is a fundamental asset. In a world of CBDCs and total surveillance, anonymity is the ultimate luxury. If they can track it, they can tax it. If they can tax it, they can take it. Secure your digital perimeter now. Use the tools of the future. VPNs, encrypted communications, and decentralized exchanges. These are just toys for geeks. They are the bricks of your fortress. You are not just saving for yourself. You are building a 100-year portfolio, generational wealth that survives the reset. The window is closing. Every day you wait is a day the system wins. The choice is yours. Stay in the net or build the arc. This is Money Signal. We don't predict the future, we prepare for it. The signal is clear. Are you? Let's look at the math. If inflation is 10% and your bank pays you 1%, you aren't earning interest. You are paying a 9% wealth tax for the privilege of losing your money. Trillions of debt. It's a number so large the human brain can't even visualize it. Let's try. If you spent $1 every second, it would take you 32,000 years to spend $1 trillion. The math is broken. You cannot save your way to freedom in a system designed to print. You must bridge the gap between fiat and hard assets. Your 30-day action plan. Day 1 to 7. Audit and cut. Find every leak in your financial boat. If it doesn't build your future, kill it. Day 8 to 21. Setup. Open your self-custody accounts. Buy your first physical ounce. Not later, now. Speed is your only advantage. Day 22 to 30. Automate. Set the system to run without you. Become the machine that grows while the world panics. 2026 isn't just a year, it's a filter. It will separate the dependent from the sovereign, the victims from the victors. Which side are you on? The signal is constant. It doesn't care if you're ready, but the history of wealth is written by those who acted when the signal was clear. This is your last warning. This is your only map. This is Money Signal. Build your arc. Now. Myth number 1. Real estate is the ultimate safe haven. In 2026, illiquid assets are traps. You can't eat your house, and you can't move it when the tax man comes. Myth number 2. Cash is king. Cash is only king in a world without inflation. In our world, cash is a melting ice cube. Every second you hold it, it gets smaller. Myth number 3. Diversification means 50 different stocks. That's not diversification. That's a collection of correlated risks. If the market dips, they all dip together. Myth number 4. The bank will protect my money. The bank is not a vault, it's a business. Your deposit is their loan. In a crisis, they look out for themselves, not you. Myth number 5. I'll wait for the bottom to buy. The bottom is only visible in the rearview mirror. By the time you're sure, the opportunity is gone. Stop listening to the noise of the masses. Start listening to the signal. 5 myths, 1 reality. You are either a builder or a victim. The year 2026 will be the great divide. The information is now yours. The map is drawn. The arc is designed. The only question left is, will you build it? This is Money Signal. Your future starts the moment you stop waiting for permission. Sign out. Build up. See you on the other side.